Hi, everyone, and welcome along. It's good to have your company today for our Sunday market update. It's great to have your company, and my name's Paul Botchell. I'll be joined by the team from Actions to Wealth in the next few minutes as we start and get into this market and have a bit of a look at what may come up in the next week or so for us. If you're on Facebook, if you're on YouTube, and you have any questions, feel free to put them in the questions box and let us know. If you are on Twitter, we can't take questions from there, but you can go to Facebook or YouTube and get the questions in live while we're here. Should be a good event today. We're going to have 10 minutes early on from Julian on macro markets. Ash will be in talking data to us. Ainslie on gold, then we'll have Shukri on crypto, Ainslie on oil, and then Geoff doing the TA session to wind us up. A few different faces coming in as I speak right now, so good to see you all. Julian, the macro market conditions out there at the moment getting clearer or getting a bit more difficult to understand?
Look, for me, I'm seeing things in a slightly more clearer way, Paul. I think we've got past the holiday hubris of July and August, and we're coming into a slightly different environment. So it appears. So for those of you that followed my macro theme last week, I was talking about the Citibank Global Surprise Index and the American Surprise Index and what that's doing. We know that the economists are being beat down pat by the economy at the moment. It's going in the opposite direction to the way the economists want it to go. And you also know, for those of you that follow that show, that I've been banging on about inflation and how it's slowing down. So what we saw was inflation come out. I think the headline number was about the same, or it might have even been slightly higher. Do you know what? I don't care. What I looked at was the rate of change, and I saw the rate of change falling yet again. I believe 0.1 or 0.2 for the CPI on month, which for me is very significant because, you multiply 0.1 by 12, you get to 1.2. You multiply 0.2 by 12, you get to 2.4. So the way all these percentages work means that as soon as you get some of that old data out of the market, out of the economic numbers, then the inflation rate will fall back pretty quickly. So this is my question, as I keep saying over and over again. If you look at the 30-year bond yield, okay, if you look at the 30-year bond yield, what is going on there, right? At the moment, right, we are seeing the 30-year bond yield still hovering. It hasn't moved. It's still sitting at around about 2%. Okay, so what do they know in the US markets? What do they know at 2% that the inflation market doesn't? And the bond market, as you always know, I have a massive amount of respect for it. So maybe they're saying that inflation is transitory. That's what the bond market believes at the moment. We'll wait and see, because as always, we have to. And Friday was such an interesting day because in fact, everything fell, right? For those of you who were looking around the markets, what actually went up? Well, just the dollar went up, right? For those of you following me in my broadcast group, that dollar Sing position did quite well on Friday. And also we've been making money out of that short stock position as well too. So at the moment, how I'm thinking as we walk into surprise September, let's call it, we're now sitting in a slightly different thing where, funnily enough, the market seems to be catching up with possibly the slowdown that's out there in the economy. Now, that may be caused by all of the supply chain issues. It may be caused by a lack of buyers. It may be caused by the increase in the number of COVID cases and people are still running scared. Who knows? But I suspect it's a combination of those things. Also, the government's removing some of their support, right? So in the US at least. So you can already see the ingredients that you have lining up for a potential, and I'll say this very carefully, potential correction in the stock markets. It's been 2 weeks down. I don't recall we've actually had really 2 weeks down for quite some time. I know there's been a couple of up days in that, but 2 Fridays where it's closed on the low of the week is quite unusual. So what am I saying here? I'm saying here, beware of convexity. Beware of this being the final grain of sand that creates the avalanche, okay? So what does that mean? That means that if the market was to quickly move, which that probability is growing, quickly move in 2 or 3 short days, we could see a 10% minimum correction in the market from this point, right? So almost like a waterfall. It just starts and then snowballs, not like a waterfall, like a snowball effect, right? And so this is how I tend to view it. I always describe the world as being a pile of sand, and it just takes one last grain of sand to start to create the avalanche on one side of the pile. And I think we may be getting close to that point. However, we might not be, right? So we've got to be careful, and we trade the price action as we see it. Now, the price action we're seeing at the moment isn't very good in the US equity markets. And when you look at that combined with what's happening in gold, so down, combined with what's happening in the dollar, so up, that is the sort of market where you have what I call the correlation of 1 on risk assets. We are in a risk off mode as we have been for the last week. Now, risk off, that's something and a word we haven't heard for a very, is it one? 2 words. We haven't heard for a really, really long period of time, right? Do you remember the days of risk on and risk off that everybody used to use? When did we stop using those? Well, that was probably when the stock market bounced last year in March, right? So from that point, right, that concept hasn't been used anymore. Well, I'm going to bring it back. I want to be the first to bring it back. Let's keep a lookout for it when Jim Cramer's next on CNBC. I'll text him tonight, right? And we got to say, hey, look, risk off is now a potential possibility again, right? So what does that mean? That means the dollar goes up. That means stocks struggle. So you can see how this is going to work. So if you believe that the convexity is here, and if you believe that we are in the situation where we may see some declines in some of those key asset markets, then if that is the case, the US dollar will most likely rally, so trade accordingly. As always, with all of this, I have the caveat that we have to have the price action to support us. This is the key thing, guys. We can't do anything without the price action. So if the price action supports it, we go with. Now, when we look at the way the price action has been in the US stock market, so let's see if I can just share the screen here and show you guys a couple of things. Let's have a quick wander around, shall we? Okay, I'll leave oil for Ainslie, here's the US stock market. There's the weekly. So how many weeks have we been down twice and closed down those 2 weeks? Well, there was one case back in May, right? That was the last time we had 2 negative weeks. But if you look at that, there was 2 tails together. When did we have 2 weeks where it just went straight down? The last time was back in February. The time before then, we had to go all the way back to October, right? So this year, if you do a 12-month from where we are now, oh, sorry, guys. Oh, try hitting the sharing button. That would help, wouldn't it? Thank you for that. Hopefully you guys can see it, can see the share, I hope. Let me just stop it and start it again because I'll make sure. Here we go. You don't want to see me, you want to see the chart. Hopefully you guys can see the chart, and thank you for the, thank you, Dominic. So here's the US stock market, two weeks down, closing on the lows both times, right? So we saw this back here in September and a little bit in October before we began a big rally. Where else have we had it? We had it once in February. So from here, that's what, 7 months ago was the last time we had 2 weeks trading poorly. This I don't count because we had such big tails. So it closed, but it closed well in the middle of the range. So it doesn't, in my mind, doesn't count. And we have not done anything to any of the major support. Where's the first, like intermediate support even, is down there at 43.70. You then got it down at 42.30. And this is what I'm worried about with the convexity of everything. So if we were correcting aggressively, 3,600 is just this year. Okay, and it's been quite a long bull run. So we could see 10, 20% off stocks without even touching the sides. What I'm worried about is the speed that that happens. We're living in a digital world these days. Things seem to happen faster. Keep a lookout, guys. Trade the price action. When you look at the daily chart on this, I don't know if anybody's going to cover stocks, but when you look at the daily chart, you can see here that we've gone 1, 2, 3, 4, 5, 6. Well, that was a slight up day, I guess, but it was still a down day against the open. So all the red bars that we've got, we've only had one real positive day. Okay, the rest of them have all been a bit crappy. Okay, so this is the definition of a downtrend, right? So when's it going to end? Don't know. Who knows, right? What do we think is, in order for it to end, I think you've got to find a buyer. Where are the buyers going to be now? Well, they're going to be down here, and they're probably going to be down here somewhere. right? So this is your first set of buyers down here at 43.80 area, right? Where are we now? We're still 44.30. We've still got another 50 points to go on the S&P, which according to this looks to be about another 1 or 2 days move if we are going to go down. I think we hit it faster than that, and I think we'll go through it, but who knows? We'll trade it as we see it. So guys, just remember, right? Seasonally, September isn't the best time of year for stocks. And on top of that, we've got negative price action. So then, as a result of that, and maybe some of the other guys will talk about this, we'll see the US dollar has had, on the other hand, has had 2 cracking days, right? So it has broken out of its trading range. When you look at the weekly chart of the US dollar, that traded okay. Where's your risk? Your risk is if it takes out last week's low. So again, here's your theory, right? Trade the price action as you see it. You see a retracement and you believe in this, then you've got your targets, you've got your risk factors. You can take positions, okay? If you're whatever happens, if you lose a little bit of money, then it doesn't really matter too much because you've got that risk well controlled. So here's the key thing for the next few days. Think risk control as being your primary consideration. Okay, risk control, that's what we're talking about here. If this market does start to go and strange things start to happen, which often takes place in September, what you need to do is to make sure you got your risk in place. I'm sure Ainslie will talk about what's been going on in gold around that. And also, well, maybe oil not so, because oil's been going in the opposite direction. But there's a few things that in my mind are worrying me. If you want to see a crazy market, I'll put a crazy market up here. And by the way, guys, I'm not going to use the. Let me put up the. Hold on. Let me put up the Chinese one. I'm not going to use the cryptocurrencies now. Okay, look at this crazy move here, right? For those of you that don't know what this market is, you're going, well, that looks really crazy. This is the iron ore market. Okay, a normal commodity, not a digital currency. You see that high, 220. You see that low, 120. Right? How long did that take to happen? Well, 6 weeks. 6 weeks it took to halve. Okay, that's quite interesting, right? So just bear this in mind that some of these asset markets are a little bit expensive and we could see things like that happening elsewhere. So that's why risk control is really important. So for those of you that saw my macro view last week, remember this thing, right? Inflation. Inflation is still transitory in my mind. I might be the only person in the world still saying that. It looks like government spending stabilizing or coming down, and it looks like the pandemic is stabilizing or getting worse. It certainly doesn't appear to be getting better pretty much anywhere you go in the world. So with all of the issues that we have, is it a surprise that the economists are under struggle and employment numbers are coming out on the downside? Key thing for me, right? The next big massive number for me is going to be the payroll numbers for next month or for this month when they come up in October. So that's what, in a couple of weeks' time, they are going to be critical numbers. If they're crappy as well, I really don't want to think what will happen to this US market. I think it might finally break when people figure out it's not as good as they thought it was. So guys, that's it for me. You know, look, really be careful out there. It's a risk off market, so you've got to be careful. I love the dollar at the moment. It seems to trade well. I'm a bit nervous on stocks. They seem to trade poorly, and everything else, trade it as you see it. That's it for me, Paul.
Cheers, Julian. Thank you very much. And certainly that COVID situation around the world does seem to be getting a little bit worse. A couple of cases in the Waikato overnight, New Zealand, Julian, that will not make this week any easier for us in the North Island at all. I wouldn't have thought. Thank you very much for your input as always, mate. More important stuff than COVID news there. And that iron ore price is stunning, isn't it? That is a heck of a fall, right? And yeah, you know, we will watch these markets with interest. I do think those, as you say, those wage numbers next month out of the US will drive it in one way or the other. Thank you for that, mate. It's now time to get Ash to come in and start talking a little bit about market data, the stuff that we can look at to get an indication of where this market may go. Ash, what are we looking at today? We're looking at seasonals, we're looking at fundamentals, looking at cost.
Yeah, so we're going to look at the COT data for the Australian dollar and the dollar. I think it's going to be important to touch on, as Julian's just covered, quite a few things with the dollar. And the dollar really is on the move, and it is a very, very big story right now. Obviously, the announcement of taper seems to be something that the market is focusing on, but I think the S&P is actually probably more important as a potential driver for the dollar. But let's just have a look at the Australian dollar, and mainly because it is now at the maximum level for the COT data to show that we should take some serious view on buying the Australian dollar. Index 36 at 100%, index 18 at 100%, index 6 at 100%. So that's 36 months, 18 months, and 6 months, respectively, all saying that the commercials are very bullish on the Australian dollar. Longs increased last week by 13%. The shorts increased by just 7%. When we go over here to the seasonal chart, this is suggesting that actually the move in the Australian dollar might still be a little bit early, and a bottoming out is much more likely when we hit the start of October. I think there's probably enough of a level of error around this area to say if there is a decent buy signal on the Australian dollar, given what we've got with COT data. If the fundamentals can start to agree with it, then I think that an Australian dollar long may well trigger a little bit early. When you think about some of the other things going on with Australia right now, it's probably questionable that that's the case. So I think I'd want to see some other bits and pieces line up before I start to say, let's get in here. I quite like the Aussie dollar, but as I say, looks like October is the best possible timing for us if we are going to be in accordance with COT and if we're going to be in accordance with the seasonals. Now, coming over to the US dollar, the picture on the US dollar is more interesting in many respects because I agree with Jules about the US dollar. I think that the US dollar probably does have some more upside to it. I don't think it's about the taper thing, but what we are starting to see is numbers that are suggesting that there is an economic slowdown in the United States. And initially that would start to point towards, the potential for taper talk effectively to come off the table. So, you'd start to maybe say, well, the dollar could weaken off the back of that. And it may as we start to play this out. But initially, what we're seeing is the S&P suffering as valuations are so high. We're seeing valuations in the S&P high for quite some time. The data in the surveys are effectively saying, don't expect GDP to continue at this current rate. And if that's the case, then businesses will suffer. The businesses survive inside the S&P, and the S&P probably will start to come down. And what we saw was when those numbers started to come out, we started to see the dollar start to pick up. So the COT data in the near term, the 18-month and the 6-month, do not support this particular theory. Now, the one caveat is that this is recorded from Tuesday to Tuesday. So I'm going to be really interested to see whether there were some dollar longs initiated between Wednesday effectively and Friday, or Tuesday and Friday from last week. Because the University of Michigan Sentiment Index came out and basically stated, this is one of the really good consumer numbers. It came out and effectively stated that growth is going to be a little bit more sluggish. So I'm looking for this COT data to start catching it up. And I think it's okay to wait for it. I don't think we need to go early. If we come over to and look on this on the longs, negative 26% from last Tuesday to the previous Tuesday. In the long positions, shorts started to increase by 8%. So this is not suggesting that we should be looking at long dollars in the longer term. Even the 36-month is saying 25%, which is anything 20% and below that suggests selling the particular currency from the commercial traders. Now, if we bring the seasonals in, then we get a slightly different picture. The seasonals suggest that around about the third week in September, we do start to potentially rally into October, take a dip, but then rally right the way up until the end of November. And we're getting very close to that particular time frame, or if we're not going to be in it next week. So the seasonal suggests maybe some dollar longs could be on. COT data is not keeping up with it as yet. But there are kind of other indications that suggest that some safety taken within the dollar are probably on the cards as well. I will finally look at the S&P because the discussion we're having really is about what's happening with the stock market and how it's spilling over to the currencies. And COT data is fairly benign, 45%, 45%, and 19%. So near term's a little bit weaker, but generally speaking, it's relatively near the 50% mark to say that there's nothing really to see here. And as Jules says, September, pretty dour, generally speaking, particularly towards the end of September. October doesn't really fare too much better either. So we could be headed for 6 weeks of potential downside, potential sideways price action. We're not, in accordance to the seasonals, headed for another rally during this period at bare minimum. So, all these factors are suggesting that some weakness in the market could entail, and some potential strength in the dollar might be supported by that. That doesn't point us towards the Aussie dollar long, incidentally. So the COT data may well need to stay here and get stuck here for a while for us to be able to take advantage of it. Right now, looks like it's a bit early.
Cheers, Ash. So Aussie dollar longs in the wind, but not just yet. Looking for the right signal and the right timing for that, right?
Yeah, it certainly looks that way, mate. It looks like the global slowdown may not play into the hands of the Aussie dollar at this particular stage. So doesn't mean the COT data is not useful, but it's basically saying maybe be ready and make sure that this data stays where it is when the terrain changes a little bit. And if it does, then we can start to have a bit more confidence that with the commercials. But I don't think jumping on board with the commercials yet would be wise.
I get that, Ash. Interesting stuff too, because the seasonal, while it goes down, it's got a pretty good rally after that. So what I think we're saying is that the commercials have got in early, and they can afford to do that because they got big stops and big space, right? They can just hold through. But if you're a retail trader, maybe you're looking for some stronger reversal signals. It's quite a big move in the Aussie if you can time it right?
I think you're right. Yeah, I think that summarizes it really, really well. And yeah, the seasonals don't match it yet either. It's certainly looking at the what we've got here. Sometime in October looks better.
Right. Well, we will hold out, and sometime in October we'll see if we can make a few dollars out of it, mate. Thank you very much for that, Ash. As always, great to get your view on the data. Next up, we're going to have Ainslie talking gold, and the Golden Girl is back to talk gold with us. Ainslie, what will gold do this week?
Oh, after its little hiccup last week, interesting. Let me just grab a screen. I'm just going to stop Ash's screen just to text. Yes.
You're right there.
Yeah, I'm just trying to stop the screen sharing there. So
there we go. All good.
All good. Sorry about that.
Got your charts up now. No problems, Ainslie.
Great. Thanks, Paul. Well, after yet some more consolidation on gold, we ran foul of a strengthening US dollar, and yeah, the bond yields certainly took off on Friday, as we could see here. There was just, after holding support for quite some time, right through this area, through here around that 1785 through to 1794 area, it just broke down and all bets were off. And we had been hopeful that it would hold that support, but there was nothing stopping it on Friday. It just took a nosedive and away it went. With the continued strengthening of the US dollar, I can only suggest that perhaps we will see a further slide on gold, just from no other reason but because the US dollar is its counterpart, and it's just, I'm expecting it to come back down around the 1730 mark, which is just over here on the right-hand side on the daily chart. It just is going to be an uphill battle. I can't, in all honesty, just say when you've got that move, that it was so solid, it's probably one of the strongest moves we'd had since the 6th of August after the last NFPs back in August, on a daily move like that. It was quite vicious, and I would suggest that when you look on the 4-hourly chart at how the velocity of this bar here, I'd say a lot of stops that had been hit and away it went. So at the moment, we're just going to have to tread carefully to see if there is further downside move on gold. But yeah, not quite where we would like it to be. And by the same token, we're coming into the end of September. End of September is really the end of a long on the seasonal rally that we didn't quite get at all on gold this year. But anyway, that's a seasonal bias is only that. It is a seasonal bias, and it's just something else to have behind you when you're looking at a trade setup. Didn't get it, not to worry. Let's just see where this lands before we get a bit more of a renewed interest in gold, which we really don't see again, fingers crossed, until end of November.
Yeah, my feeling still is that the big money's buying the dips in gold, that it's not particularly freaked out by this, and it's down there buying. Any levels you're looking for on the downside, Ainsley? Any sort of targets where you think it might bounce from?
Yeah, my next one that I think it'll bounce on is this one here, which is that 1730 mark.
Oh, yep, that's got a bit of history for sure. Okay,
yeah, it's a really strong area, but if if all the brakes come off, we're back down here around that 1680 level, which was, as you can see on a daily basis, it's quite strong down there.
Yeah, and so 1680, we're talking about, this isn't a big deal until we get a close below that. We get a close below 1680 on gold, and all of a sudden that is becoming deeply concerning, right?
Yeah, that's a different game.
Yeah, that is
a really different game. You could say, look, at the moment we're looking at a really big range just here between this 1750 and 1830. It's 1832, 1833 kind of area up here, which it just did not crack. It had 4 attempts at it, didn't crack it. So, it hasn't performed like it has previously with a seasonal bias this year. But, that's the way it goes. Everything's a little bit different than it was previously. So you just bundle all up, look at price action, and see where to next.
And this is a US presidential electoral year, and that quite often has an impact on gold pricing. Right, this is not out of the book all of a sudden for gold to be in a different thing after, and particularly one where we've seen a very different type of gold sentiment driven to some degree, and we have a very different type of approach from the president of the US, and sentiment goes around that, right?
Yeah. So if you look at a chart for 2013, it had similar hallmarks like this. So it does happen every now and again, but not after every election. So you don't just say, well, it is a US post-presidential election. But 2013, it's not dissimilar.
Going to be an interesting time, mate. And this is it, right? That last year you had an amazing year on gold. It rallied when the seasonal patterns, and you just smashed it. And this year's where we show that you are an incredibly good trader, because the key in this year is not to destroy your accounts, right? It's about understanding it is different, being patient, being careful, and the truth is at some stage gold will rally and you'll smash it again, right?
Oh, look, bring on 2022, I say.
Nice, Ainsley. Thank you.
Be back for oil.
Thank you very much. Look, our next guest is Shukri. Shukri Hamid is going to come in and talk cryptocurrency. I'm going to share a chart with Shukri and give him something to talk about. Shukri, this really surprises me. See if you can help me out with what surprised me about this chart. Can you see this chart? What surprised? This is Fusion Markets. Okay. What surprises me about this chart, Shukri?
Where do you see that? Do you see that? This is Fusion. It doesn't work on the weekends.
That's what surprises me, Shukri. What's the price of Bitcoin right now? The price of Bitcoin right now is 48,000.
It is 48,109. Yeah. Wow. So we're maintaining this. Let me show you my chart.
Hold on, Shukri.
Okay, you want to see more things?
This is the first. No, hold on. This is the first time I've seen a retail broker offer 24-hour day, 7-day crypto.
Wow.
This is the Sunday chart from Fusion moving. This is not Friday night or Saturday morning's chart. This is the live chart on crypto.
Awesome. Yeah.
Fusion Markets, Bitcoin Cash, Bitcoin, Ethereum, Litecoin, whatever XLM is, DOT.
It's working on the weekends.
24 hours, 7 days. Limited service, to be fair. You should be a little bit careful with limited service. But
what does that mean? Is it the spread? Does it have to do with the spread, or they limit you on the?
It means that if something goes wrong and you ring them, someone may not answer the phone. Fusion's one of those companies that's got really good customer service, and over the weekends they can't do that because they're only open, obviously, for crypto, but they are open for crypto, and they are 24 hours, 7 days live feeds on a number of cryptos. Who's XLM, Shukri?
XLM is stellar lumens.
Ah, there you go, mate. So, look, mate, it just says to me, one of the things that appears to me is that if you take away everything that everyone else says about crypto, one of the things that's really obvious to me is that when crypto was falling, we were talking about account liquidations.
Correct.
And
correct.
millions of accounts are being liquidated. People were losing their life savings.
Correct.
And we can see on this chart that those guys have started to get some money and they've started to come back. But, that they're going to be very, very cautious because they got destroyed last time. They lost their accounts, right?
Correct.
So first sign of a sell-off, they're going to dump, and we're going to see these big spike down days when that happens, right?
Yes.
But this is a way that crypto finds a new market.
Yes, correct.
Retail Forex traders are not trading this because they won't trade it through the weekend gap.
Correct.
Right?
Correct.
So now they will trade it. And
now they will
trade
trade
new
it.
people, and there's a lot of retail Forex traders. And if this is the trend that's coming, we are going to see a lot more people come back into this crypto market, and that's what it is all that it needs, in my view.
Yes.
So, Shukri, over to you.
And also because of this, there is a rumor coming along because, again, there's a rumor, but it's supported by dates. I think there's a lot of days in October where people expect a Bitcoin ETF to be finally approved. There's about 3 coming up. So this is very simple, Paul. So this is like your chart, right? So this was the death cross, and suddenly now we have the golden cross again. Okay, that didn't take long. And now it's very simple. If it goes here, I see it. Yeah, I think it's if we don't have an ETF, it's going to be between 53 to about 55. Maybe it goes back up and then it goes back down. If we have an ETF, it could go to 85 before dumping down again, because if you guys want to be in crypto, you have to be used to pump and dump. But now I think people are not selling because they think we might have an ETF. I mean, Canada has an ETF.
Look, it's we will see an ETF. I have no doubt of that. Shukri, I'm going to ask you a question on this, right? Because one of the things I'm hearing from people is, if Bitcoin doesn't take out 53,000, they're out.
Yeah.
And I've heard that from a number of people recently, and I get it, right? But truly, if Bitcoin doesn't take out 53,000 this time, it may well consolidate for a period of time and then knock over 23. Yeah. The problem's not 53,000, it's about 42,000, isn't it?
Yeah.
Take out these lows and all of a sudden we're in a different game, right?
Correct. And then look at this consolidation thing.
Yeah, the big consolidations in crypto, right? The one before that is just a big consolidation before it steps down. But they're not small consolidations, they're big consolidations. Big. But, I wouldn't be dumping my holdings if it doesn't take out 53,000. Yeah, I wouldn't be in this market at 40,000. Yeah,
correct. And then the thing is this: as long as this maintains, then good things happen. Because last week, we know this in Crypto Moon 3, right? Look at this. This is AVAX. This is the crypto created in Cornell University, and there's another one, and they're all grabbing the attention. As I said, the incentives that they give are amazing because they're very well funded. But I've always said that, Cornell, I don't know whether MIT or Cornell is number one, not. We say Cornell is number one. They say, I talked to an MIT guy. No, MIT is number one. Okay, but MIT is going to hit back, okay? And MIT is going to hit back with something called Cello, which is also funded by Andreessen Horowitz. So I heard that they are even now rolling out incentives for DeFi. So it's going to be a battle of the DeFi fall. But anyway, what happens is when we see Bitcoin do like this, if we are clever, we start to party. And this is what I did during the past week. I put $75 into this IDO. It's now 3,200. I put $60 into this IDO. It's now 1,200. I minted this NFT for free. It's now 4,800. So basically, I only spent $135. A lot of sleepless night, Paul. I've been sleep deprived, but that $135.
Honestly, when you start talking about making $135,000 off $100, I don't care how little you. I have no sympathy at all, mate. We're all prepared. But we'll take a survey in the room pretty soon. The amount of people who are prepared to not sleep for a week for $100,000. Take it, Shukri.
Yeah, we need to take that survey. I've been very sleep deprived. I've lost my orientation now. What time is it? I don't know. I was late today, like Paul. I'm like, what time is it? How am I supposed to know? Okay.
So, mate, you spent under $200. You made $100K, right?
No, that was 200 to 9,000. The airdrops, yes, the airdrops I spent. Okay, here's the airdrops. I put 1,000 capital in. The 1,000 is still there because I'm very smart. I didn't trade for profit. I just traded to get the transactions. And another one, I same thing. I got like $200,000 for 1,000, which is still there.
Yeah, well, that thousand is really important. It's far more important than 200,000. You just give the 200,000 to your friends and keep the 1,000 because you can do it all over again.
Yes.
Mate,
yes.
we are in a seasonal down for crypto, right? That September is the seasonal down month in the year, really. Not a steep down, but a steep down. Some consolidation around here is expected, but NFTs are still going a bit crazy, and some of the IDOs are still going a bit crazy, right?
Yes, so I do expect what Julian's concern, I do share with him. I think that because we've had a good September in what is a bad September and it's still down, I think we should have a consolidation during October, because this year it seems to do the opposite. So seasonally, October is a good time, and I saw Julian's concern. I agree with that. I think we're going to have a correction in October. I really do. Okay.
Cheers, Shukri. Thanks for that. Anything else before we head on back to oil?
Nope, that's it.
Cheers, Shukri. Thank you very much. Ainslie, we move from the golden gold to the black gold oil, another one that had a bit of a bumpy couple of weeks recently.
It has, Paul, but it's had an interesting couple of weeks, up and down, a bit of sideways, and then we had a bit of a takeoff, and then we've had this, we had a bit of a pullback, and there were a few things happening in oil, and the OPEC plus countries very nicely stuck to the rule book, and they increased production as per their agreement. There were no ifs or buts or banging on the chest or flooding the market or anything like that. So they did a very nice job there. There was obviously a bit of a pullback during the week, but what was interesting with the way it has moved after it's finally broken out of this horrible consolidation for the last 15 days, 16 days, was that we've had it come back and it's just clipped and sat above and stayed above the 20 moving average on the 4-hourly chart. That and the way I'll read my, just a technical insight is, the way I read my MACD is the blue line is MACD, red line is signal, MACD below the signal line, but price action still above the 20 EMA indicates consolidation. So even though we've had this pullback for the last couple of days, end of last week, we're still closed and still above the 20 EMA. Interesting things coming up in the next the 24th of September. Earmark the 24th of September, put it in your diary, and just watch the price action really carefully around there. That has been a day that's been earmarked by the Chinese to auction their excess oil supply. They are desperate to get the oil price down. They don't like it down. They don't like an oil price that's too high. They don't like any of the commodities up too high. They did this not so long ago in copper. They drove the price up. They bought a lot of copper, and then they just hit the market and brought the copper price right smack bang down again. So 24th of September, which is Friday, Chinese plan to hold an auction. Now the thing is that they've actually announced it. Will be interesting to see if it's already been priced in, or whether it is going to be taken as seriously as perhaps some of the other moves. And I do suspect that was possibly in there as well last month, that brought oil back down pretty darn quickly. The other thing we need to just bear in mind is that a few things happened during last week, and that was that there's still some fallout, and some of the US suppliers are offline still because of Hurricane Ida. There was a bombing in Colombia at one of their major oil plants, so that just slowed everything down. But as you can see, it didn't send it flying. It just didn't send it flying. I also heard if the Northern Hemisphere has a particularly cold winter, with everything that's gone on, they expect to see oil hit triple digits by the end of the year. That was initially what they were saying when we thought we're coming out. This is pre-Delta, when we're coming out, and there was an economy, a recovery economy really starting to ramp up and pushed oil along. When was that? That was back May, June. However, there's been some analysts now re-looking at what's going on with what has happened just recently. We are going to see that triple figure hit by the end of the year, with a cold winter coming through for the Northern Hemisphere. If not, that triple figure was actually suspected to be hit by mid next year, but they've just brought that up 6 months in advance. So whilst I see oil just sitting, just paddling really carefully here, that retracement's nothing to get terribly excited about. And yeah, I'm maybe one more bar, and we have a bit more of a pullback at the beginning of next week before I suspect a bit of a onwards march. Well, that's where I'm looking with oil.
Yeah, look, it's been interesting. As you know, the technicians have been around at sort of $92 to $100 on oil for a long time now. You know, there just appears to be some confidence in that target for a long time. And again, you know, my suggestion is at this stage, the pros are probably buying the pullbacks on this and are looking for a bit of a run up at it. And yep, I'll certainly be back in the charts on Monday having a bit of a look, and I wouldn't mind picking up a little buy on oil around these levels myself. Cheers, Ainslie. Thank you very much.
Bye all.
Cheers. Now, Geoff, thank you very much, mate, for covering the show for the last few weeks while I've been away. It's appreciated very much,
pleasure,
mate. Mate, I took the kids to the zoo yesterday. Every time I take the kids to the zoo, the Tasmanian devil, he jumps out of his little thing and he jumps up on his cage and he almost waves at us. I always think of you when I see the Tasmanian devil, mate.
He's a good fella, isn't he? I thought I was going to be compared to an animal there, but yeah, I like the Tassie devils. They're good little fellas. Do they make a bad noise though when they're wandering around the place? Do you think all hell's going to be unleashed?
Yes, I believe that. Now, mate, technicals, mate. How are the technicals this week? How were they last week? How are they this week? What are you going to look at this week?
Yeah, look, interesting. The first thing I want to look at is, and I'm really sorry I couldn't get in the earlier session with Julian because of this particular scenario. This is Aussie yen that I'm looking at. And Aussie yen would be, if there's a currency pair, that would be an indicator of risk on, risk off. This would be that. So I take on board a couple of things that Julian said. And if he believes we're risk off, then I'm also in his camp. But the chart's not telling me that on this chart anyway. The chart's telling me this is ready to take off to the high side until this level here breaks. If this level here were to break, then everything changes. The cool part. Sorry, mate. Oh, what's the level? 78.20.
So 78.20 is your key level on Aussie yen. Above that, you're bullish. Below that, a bit more concern.
Totally. However, the chart that threw up on Friday suggests to me that we're going to have another look at this level before we do go long. And that candle on Friday is very, very interesting. You can see that we have almost gone into trend short. And the fact that we've rejected that monthly pivot level twice in the previous 2 days trading, Wednesday and Thursday. But Friday, what you would expect with that bar is a bounce off the monthly pivot and probably go up to the next resistance level. That didn't happen. And on Thursday, it failed to do that. And again, on Friday, it failed to do that. More significantly, on Friday, closing below the monthly pivot and this previous low over here, or at least matching that previous low over here. That's where it becomes a little bit tricky. But I think that candle there is telling me that we're going to have another look at perhaps that level 78.20 before we go anywhere else. So I'm actually a bear on Aussie yen, and you'll be amazed to hear that fundamentally I think there's a backup for that. Aussie's got a bit of an issue at the moment, not least of which was another thing that Julian pointed out to us, and that was the halving of the iron ore price. Now, iron ore constitutes, I think it's somewhere between 15 and 17% of Australia's exports. It also commands a 3-point-something share of Australia's GDP, which is not insignificant. Therefore, a halving in an iron ore price is not going to make Aussie dollar investors jump out of their seats buying it, I don't believe. On top of that, you've got the Australian government announcing late last week that they have ditched a contract with the French to supply them with, I think it's 10 submarines or something. And that deal's been kind of ongoing for a couple of years, as I'm aware. That's just cost the Australian people some billions of dollars in forfeiture of the contract, which was cancelled, and also progress work to date. Now, I don't know that number in itself is significant, but what is significant is that both China and France have come out and really kicked the boot into the Australian government. This does not smell rosy to me for trade with the Eurozone and indeed with China, who are already got heavy sanctions on quite a few of Australia's products. So I take on board what Ash said earlier as well, that seasonally we're about to get a bounce in the Aussie. Gee whiz, I think that's going to be delayed. Anyway, sorry, that was more fundamentals than it is technicals, but I think it's worth considering what I've just said. So the charts that do bob up this week on my radar are dollar yen, because we do have a game changer bar, but then we've had probably 5 or 6 of those in the last few weeks. So I am staying out of this one. I think it's just too risky. Euro CAD again, if we go back to the risk on, risk off scenario, you can probably read into it that the CAD is under pressure as well. I don't see why that's the case, given the numbers that are coming out of Canada, but I do note that we've got a Canadian federal election, and that's probably going to sway price a little bit here as well. So technically, I'm seeing downside for Euro CAD because we've come off the top of this range and we've put in a lower high. I would expect further downside from a technical point of view, but I don't know that we're in a technical scenario at the moment on Euro CAD. Two that I do think we are in a technical scenario on, pound yen and pound US dollar. Now, pound yen, again, comes onto my radar this week for 2 reasons. Number one is the weekly chart, or the weekly candle, sorry, from last week, which is very, very evidently bearish and strongly bearish, closed just about on its low. It also is giving the hint that, well, we've closed below the monthly pivot as well. It's giving me the hint that it's matched these 2 highs here and looks to be peeling off that. The next level looks to be down here. There's a bit of a confluence with trend line and horizontal level as well. So I think this is probably a good selling opportunity for us. Do I want to trade the bar? Look, I don't see any reason why you wouldn't want to trade the bar. Get your entry underneath there, stop loss either above here or above here. I think that would be wise. The daily charts suggesting that we've got a bit of a false break. Interestingly, similar to what I pointed out on Aussie yen, where this bar here would suggest that we were going to resistance level, didn't do it. And Friday's bar, once again, was very, very strongly bearish. So I'm of the opinion that we're going back down to here and about the 149-ish area, 149, 149.50. And again, I think that can was probably tradable. I always put a caveat on tomorrow morning trading those bars because the market could well gap, and I want to see some price action post that gap if it were to be the case before I committed myself to trading this. But any pullback here, I think, is definitely a selling opportunity on pound yen. And very, very similarly, pound US dollar. We're already in this, trading the UK Open breakout from Thursday. But I think there's probably another, if not better, opportunity. The daily chart showing me clearly that we have a false break on our hands of that area there. Also of the monthly pivot. We've been above it. We've consolidated. We've come back below it. Any retest bar here on the daily chart looks like a sell to me. The one thing that is a bit of an issue, the most dominant chart pattern that I see on this monthly chart is a double bottom, which suggests that we're looking for a higher low. And I'm okay with that because we've got plenty of room to trade this down to here. There's a long, long way between where we'd want to enter the market, which is here. And we're talking about 500 pips by the time we get to that level. So does look to be in a fairly wide range. Early days, double bottom, double top. That suggests to me that we're going to see more price action in this area than outside that area. And that coincides with what we're trying to do here. And that is trade it short. So monthly chart, weekly chart, daily chart are all telling me that this is going short. Would love to see a pullback to that trend line and the monthly pivot in the next couple of days. And I think there's your selling opportunity on pound US dollar. So for me, that is my 2 cents worth for the week. But I do note that we've got the Fed coming up. In fact, I think there's 4. The Swiss, BOJ, the Fed, and Bank of England all coming up this week. We will attempt in Trading Buddies to trade the FOMC breakout, one of my favorite trades, 8 times a year that bobs up. And if you're in Trading Buddies on Wednesday in particular, I'll show you how that might play out. There you go, mate. That's me.
Cheers, mate. Thank you very much. Interesting look at the markets across a number of different formats today. We've had Julian come in and talk macro markets. We've had Ash come in and talk data. We've had Ainslie on gold. We've had Shukri on the crypto. Interesting to see those fusion market accounts now 24 hours, 7 days on the cryptocurrencies. Ainslie back on oil, and now Geoff having a look at the technicals. Hope it's helped your trading for this week. Remember, stay calm and make good decisions. If you do that, it'll all work out for you. Take care. We'll see you guys next week for the Sunday market update with the Actions to Wealth trading team.